Hello, ladies and gentlemen, and welcome to this afternoon webinar. My name is Theo, and I will introduce you your host for today. But before that, I would like to make sure that everyone can hear me and can see the screen. From me, honestly, I will not say anything else except that the next Market Talk series will be by interviewing John Bollinger. I'm sure that everybody knows the Bollinger Bands at some extent. Maybe you use them or not, but trust me, guys, this is the webinar. This is the interview you really don't want to miss. And please book your calendars. I'll send you the link in case you haven't registered yet. And I'm really looking forward to see your name there and say hello. And because I'm sure you're gonna get so much value out of this. Put it that way, the man itself created the Bollinger Band, will explain out loud exactly how to implement them in your trading. That's best way to describe it. Without taking more of your valuable time about the webinar, I would like to introduce you, of course, to Jens, this exceptional personality with the best smile ever. Jens, how are you, man?
I just have to take a breath now. Thanks for these kind words, Theo. Nice
always,
to be here.
Man, always.
Thank you very much.
It's our pleasure to have you always on these webinars, learning what's hot, what's not, how to do this and how to do that.
I think that's probably a little difficult for people now. What's hot, what's not. So we're talking about stocks, guys. So, yeah. But I'm sure after. Well, what shall we say? I mean, did you see what Nvidia just delivered on Wednesday after hours and their guidance, especially? So yesterday they closed, I think, 25% higher or so. And in its back, they also drove in a sympathy play, especially AMD higher. So AMD also made something like 11%, and it's crazy how big the miss of the Wall Street is here, because the Wall Street expected, I think, 7 billion or something in revenue for the running quarter, and they just guided nearly 60% higher than that, and it's mainly due to the demand in terms of artificial intelligence and that stuff. And
outstanding.
Really, really outstanding. I have to say, I'm really unhappy right now because I was looking for a bounce because I think Nvidia is well positioned for this for this development we currently witness in this space, and I hoped so bad that we come in. And instead of coming in, we just gapped to new all-time highs, and we rather sooner or later there will be a corrective move. Not sure when it will happen, but I doubt that we will trade to the levels which I wanted to see.
Exactly.
So, if I want to get rich, so I have to day trade then.
Something like this.
So
all right. So I wish you best luck. And
thank you so much. Have a nice weekend.
You too, and to everyone on this webinar. And we're going to talk next week.
I hope so. I look forward to it too. See
you. Thank you. See you.
Bye-bye.
Bye.
So, guys, we want to trade the news today. We want to focus on the U.S. earnings season and focus on potential hot stocks of the day. And how do I define stocks which are hot for the day, but also how to trade them then. And in fact, we have to hurry up a little because market opening is in around 25 minutes. And I have to show you why this and that stock is already in play, so of interest for us today, especially AMD. But there's also another company which could be of interest. It's called Marvel Technologies. So AMRVL is the ticker symbol. And I prepared everything, and I want to guide you through this so that we are capable of then jumping right into the action. Jumping right into the action brings us to the risk disclaimer. So we are not playing around here today. It's real life trading we do. So it's real money. It's my money, and we are trading. If the setup then happens and we get a spot where we can enter. But if we formulate a trade here, game plan, and you decide to trade based on my ideas, my thoughts here, then please understand that there's risks involved when trading leverage products. We are trading CFDs here, and they're leverage products. They're not suitable for all investors. So before you start, please first of all start and try CFD trading out with a demo, and also make sure that you understand all risks involved. If you then decide that what you learn here, or what I think of stocks XYZ is of interest for you, or you think, well, this is a nice play, let's give it a try, please understand that you're taking full responsibility. Everything I provide to you today is for educational purposes only. So it's nothing to copy. It's not a financial advice. It's just to guide you, especially through the process of how to prepare after an earnings release for the start of Wall Street opening, then also how to, if we make a trade, how to execute the trade. What we are not covering here is the after hours works, let's call it. So the review of the trades. In fact, I think what's more important than trading itself is in fact how to understand, how to get an idea on how to prepare for the day, and then also the review. The execution part in between, so the trading itself, is in fact not of that high importance. I mean, certainly we want to have best execution, and we have the right broker for that. We have Admirals, and I think Theo already made a great introduction. So I don't need to overextend that here. But in fact, the long-term success in your trading comes out of the preparation you put in every day, a clear routine you follow, and then also reviewing your trading. See what works, do more of what works, and see what doesn't work, and then do less of what doesn't work. And the latter part, I can't include it here. We probably can rather soon later run a webinar here on how to find plays which are obviously working, and then doing more of them, and then what parameters need to be checked here in this regard. I recommend you to download a tool, the Supreme add-on from the website from Admirals. Here you have an integrated trading journal, in fact, and you can document your trading that way. In addition to that, it's offered from FX Blue. I also recommend you connecting your account to FX Blue here, and then track your trading and all details on your trading, trade duration, for example, how's your overall equity development, are you in a drawdown, and so on and so forth. And then use this to build strategies to bring your trading to the next level, in fact, and get a clear overview of what works in your trading and what doesn't. And so that's it on the introduction. Let's just jump in here right into the charts, and I've prepared it already. So I have two stocks today on my radar. You can see them here. It's MRVL, Marvel Technologies. As I already said, they delivered earnings yesterday, quite solid guidance. And you can also see they are coming in quite strongly into the earnings, and tested the region of the yearly highs here around 49.50 around, and now they are gapping up nearly 20%. So gapping to levels somewhere around 60. So it looks very, very extended. But numbers itself and the current bias we find in the market, and there's a potential so-called, I would call it a spillover effect based on what we just got to see from NVIDIA after hours on Wednesday. And there's also another important note I'd like to make, because in the last 30, 40 minutes, we also got a macro event, which is right now of interest. It's called the PCE Core Price Index. It's the favorite inflation measurement, in fact, or a measure the Fed uses for their monetary policy decisions. And it came in hotter than expected. So this is interesting because as you may have noticed, let me just see. Do I have this? No, I haven't prepared it yet. So there you can see it. Let's head over to the Fed Watch tool, just to give you a macro picture of where we stand right now. So right now, market is expect now with a likelihood of over 50% that there will be another 25 basis point rate hike from the Fed at the meeting here mid-June. This is surprising because we remember we had this here during our trading spotlight webinars. We know that the Fed said we want to pause here, or we now reached a level where we are not planning to be more restrictive from here on. And so in this regard, oh, by the way, if I have a link to track my trading, yes, I have, but not to FX Blue in this case. So I talked about FX Blue. Coming back to this question here, I used to do this, but now I'm using another platform. So I used it once, or for quite some time, and then I switched over for my equities trading to a TraderView in this regard. But this is something you don't get for free anymore, but it's a more, let's say, advanced, more professional solution. In addition to that, there's also Edgewonk I'm using. So I have both. I have Edgewonk. What's this? Offline? Yeah. So it's Edgewonk 2. They updated it once to up Edgewonk 3 or something, and TraderView. And again, this is you can use it for some part for free, but the gold version, which I'm using in my trading, is something you have to pay for. And yeah, so I hope that this answers the question. Fed and the expectations right now. It's very interesting to see that. So there's this expectation now that the Fed will hike by another 25 basis points here at the June meeting, and I have to admit I don't see that, to be honest. I think there's a level of surprise in it, and what it's even more interesting is that the market right now pricing out here rate cuts. So look at this. Now we are at 50%, in fact, that the market, that the Fed in this case, won't move. They will pause. They won't hike rates any further, but they stay at the level we are currently at. And the market is pricing that in. So we have seen that. We can follow here the action. Let's go 1 month back. So 1 month ago, we were here at a likelihood of more than 60, 65, 66%. So 2/3 of market participants trading here in the futures market, we're expecting rates to be at 425 to 450 in this regard. So given the rate level we have here, the target rate, it's 500 to 525 basis points. That means that we see 325 basis point rate cuts. And the market now is saying, okay, inflation is coming in at a stable level around 5%. So probably the Fed won't cut rates, even though it might be necessary due to the developments we see in the banking sector and so on and so forth. I'm not really sure what to make out of this, but what I can say is that I'm very surprised when looking, for example, at the Qs, for example. I have them. So let me just here use the Qs and looking at what we have just seeing. So you can see here, the Qs just pushed above and held the August 2022 highs. Given that it's a yield-sensitive market, we can say, and given that rising yields usually should be bearish for equities, and in this case, tech stocks, I think this is a clear sign of strength and something to keep an eye on, especially now after the numbers, the PCE came in a little hotter than expected, making it more likely that probably there will be a pause of rate hikes, but still there won't be cuts. And this is something to remember when then asking the question, okay, where's the overall market standing and what can we expect from the overall market? I have to say, I think this is relatively strong, what we are currently witnessing here. And this is something to keep an eye on. And this means that here with Marvel, for example, after the numbers we just saw, by the way, I just realized, unfortunately, I haven't opened them. Okay, let me just see. I just realized that I have them, but it's not very nice, let's say. So it's something. Let me just use this one here. So copy the link to the tweet. So it's so there you can see it. So it's FSMN, so fast stock news, fast stock market news. It's from Unusual Whales. So very good overview. So I think it's a must follow in your equities trading in general. And then you can see it. So Marvel 1Q adjusted EPS above expectation, 31 cents against 29 expected. Net revenue for first quarter, 1.32 billion against 1.3 billion, beats. Adjusted EPS, 32 cents for the current quarter, which is plus minus 5%, which is above expectations too, even though expectations are not included here, and also sees AI revenue to at least double year on year this year. So also in the, by the way, let me just probably tell you what Marvel Technology does so that we have an overview. So this is in German. That doesn't make sense here. Let's go here. So American company headquartered Santa Clara, California, which develops and produces semiconductors. This is the market which is currently very, very hot, obviously, and related technology, founded 1995 and so on. Company had more than, and so on and so forth. So they are, let's put it simply, in the semi business. And that's why, due to NVIDIA, this is currently hot. It's just the hottest market out there. And so coming back now to the numbers. So they beat expectations. And this results in a massive gap up, which I check here with the so-called pre-market screener. Let me just share the link here. So it's I call it PMKT, okay? PMKT is for pre-market, and it's for free from MarketWatch. You can check what stocks are doing the pre-market here for free on their website. And you can see it here. It's plus 70% right now, gapping up. Over 1.3 million shares being traded. So now the question is, if the question is what's hot, what's not, why do I say that? Well, I define a stock to be hot once the pre-market volume exceeds 10% of the average daily trading volume. Which means I have to find out about the pre-market volume, which I do here via the pre-market screener, and the average daily trading volume, which I do by checking out another source, which is free, Finwiz. And there you have lots of here fundamental data, and there you can see the average daily trading volume. If you go here with the mouse on it, you can see it's for the last 3 months. Average trading volume is 12.6 million, and obviously 1.3 million is 10% and more than that. So the stock checks this box here, and is based on that, it's potentially hot for the day. So already quite strong into this earnings release, gapping now above here 50 in this regard. And so bringing us back to the chart, you can now see, okay, do we have further room on the upside? If we gapping up into this, well, not just this area here, as you can see, but we are already gapping above that level. In fact, so 58 around we are trading right now, slightly below 60. So this is bringing us to the potential on the upside. And I want to focus in my trading, I want to focus on so-called momentum plays. So what I'm currently saying is, okay, this sector is very hot. Semiconductors in general, Marvel Technology just beat expectations and is playing the AI card in this regard, which is gives a good, we get a good idea of how much potential there's for semiconductor companies in this business due to what NVIDIA just delivered on Wednesday after hours. And so that means that this is very realistic, that we are getting to see some kind of, let's say, call it chase into the open. And that means that we want to position ourselves for a potential drive higher and trade the momentum as long as there's momentum, in this case on the upside, and then reevaluate after the momentum slows and we had made our first trade, in this case, a momentum trade. So that means let's come here to my Excel file. I have a file where you can see I have the support and resistance levels for the day. And now the question might be, okay, how do I get these? Because looking at my charts, you can see, okay, that looks very like, well, not really sure. Is this it doesn't really look that sophisticated, let's say, or there's no lines in there. So where do you get the levels from? Well, in fact, I use another source here. I use TradingView as my favorite charting tool. And you can see here that I have also the after hours, which is very important, especially when we trade news or earnings releases, which were released the day before, because we want to see where we potentially open. And also, given the elevated volume in the pre-market, we can expect that the market is already trading towards and against levels which are of interest and which we want to know, certainly. So, and as you can see here, so there's two lines in this case, so like moving averages, but they are not moving averages. They're so-called volume weighted average prices. So the intraday volume weighted average price is this orange line, but what's probably of more importance or more interesting is in fact here, this purple line. This is the anchored VWAP. And what do I mean with anchor? Well, I say I have an earnings release and I want to, based on the volume which comes into the market following the earnings release, I want to know what the market on average paid for the stock to have an objective measurement of whether buyers are in control or sellers are in control, simply speaking. So, and now you can see that based on what we have here, you can make sense of these levels I wrote down here as potential support levels. So 58, 50, that's the first support, 57 and 55. I think 55 is probably even more interesting, to be honest, given that around 55, we can see this purple line coming in. So if there's really buyers in control, and if the buyer is saying, well, you know what, we want to buy the stock, but we don't want to chase it, so we want to pay a fair price, well, in this regard, I would say then I want to see here the stock trading down to this purple line, potentially holding it, buyers stepping in there, and then from there we see a potential bounce. So that's why I think long against 55 seems of high interest, but I'm not throwing in the limit there and then saying, okay, I buy there, but I want to wait for the action. Once, and I have a clear bullish bias. You can see that I'm colored here, this column. It's green. That means I'm going long the stock for today. So to remind myself, hey, don't play any games here. It really, there needs to be many checks in my favor to say, well, I'm short bias, but I'm buying now. It happens. And it happened already in the past. And in Microsoft, for example, I think after their earnings 3 months ago or something. I have to review that in my training journal. But usually I say I want to be long the stock for today. So if it's blue, by the way, you can see that here for AMD. Well, I'm not that sure right now. And I will show you why in a few seconds. But here, in this case, I want to be long the stock, which means if we drop 55, flushing into that level, we're dropping, holding below, well, long is not an option anymore. And the stock is dead for me, let's say, for the day. So I don't want to trade the stock anymore. I have a news column this is for my trading journal. I copy paste this then into my notes and say, okay, these were the earnings. And I also tag my trades. So telling, okay, that was a momentum drive play or back through open or, well, second day play, buying the anchor VWAP, whatever it might be. So I define this clearly for me, tag it, and then I can filter it within my software, filter it and say, okay, well, obviously these plays work for me and these don't. Okay, now looking at the plays which worked for me, okay, obviously there were earnings involved. So I also tag it with, let's say, an earnings play. And then I check, okay, which earnings do we have here? And most of the time I found out it's not the earnings beat itself, but it's the guidance higher, which makes sense because most of my earnings plays are in growth stocks, and growth stocks, they don't look into the past, but they are interested in what will happen in the future and what guidance do we get to see here. So this is now the earnings, the news column. I also copy paste here in my file, and then I have a game plan. I know beforehand what I want to see. So in this case, it's like, okay, if we flush, and you can see it here, 57, probably lower than that, but I'm going with 57 first. But we hold and we drive back through the open. But this needs to happen in the first 50 minutes of trading, for example. So it's not okay to say, okay, we see the flush and then it takes something like 3 hours that we reclaim the open. That's not what I want to look for. I want to trade the momentum. I know that beforehand and what I want to see, which is it's in fact crucial, because it's important to know that, because this also clearly affects your way how to manage a position. So if you want to play momentum and there's no momentum, well, then a momentum trade just doesn't make sense. If you play momentum, there's momentum, but the momentum slows, well, then you have a reason to exit your position. And this is something you probably have found out yourself when trading the markets. Once you don't know in which trades you are, then you have trouble to exit, and then you're questioning whether this is the right decision. Shall I take profits? So you take profits, the market continues higher. You say, well, damn, I just missed some meat on the bone, let's say. Okay, I re-enter. You have FOMO. This is the exact top the market turns. You think, well, why did I do that? If you're lucky, you cut your losses quickly enough so that you still have some profits, but you're frustrated because you say, well, I could have made more, not just on my position itself, but I lost something on the FOMO trade, but it just kept it longer. And this is something, simply speaking, which is creating lots of instabilities in your trading in general. To avoid this, make sure you know what you play, what you're looking for, what you want to see, and then clearly formulate it via a game plan. And by the way, we just have 5 minutes to go. So I just want to make sure that I update here the sheet so that I have everything. I have here the information on my second screen. Let me just see, where's AMD? So 1.7, 1.76, and we have a gap of 1.73. So okay. Then obviously you have the game plan and what we play. It's not just that I play the flush, but also the scenario where I say, if we drive higher, there's buyers stepping in right at 3:30 in this case, CST here, so German time. In this case, well, if there's buyers stepping in and we hold up above a level, in this case 60. Why do I say 60? Well, because 60 is obviously here a level on the upside, as you can see, which we spiked into after the hours yesterday, and it's the pre-market highs. If we drive above that and hold, it's a very strong sign. And if we then consolidate tightly above that level, I want to play for another momentum leg higher in this case. So that's just to clarify the two scenarios here. So then I want to know the ADTV. This is some short for average daily trading volume. 12.6 million. We know that. We just checked it via Finwiz. Pre-market volume right now 1.45. So 5 minutes before the open, I checked this final time, and then we have here the ATR, which is important to have an idea on when can we consider a stock to have moved a little too far away, let's say, and probably taking some off. I'm not really taking everything off there, but I'm cutting the position to a lower level, let's say. Once let me just, by the way, I have to 4.7. This is the last column. I just realized that I haven't included it yet. 4.7. It's the short percentage. So you probably have heard about the short squeezes and GME, AMC, and that stuff. Upstart, for example, has been a big and hot topic around this also just recently. And I want to know that, certainly, if there's a crushing earnings release and we have the chance of a squeeze higher, well, I certainly want to know that if I formulate a long trade, right? Long thesis for the play. In this case, both. It's nothing of high interest here, so quite low. And I want to know the institutional ownership, which is of interest, especially last week, Friday, Foot Locker guided significantly below the estimates and has a institutional ownership of over 90%. Just imagine you're an institutional a player in the market, and the company you're holding here, the stock of the company you're holding is just guiding lower, and gives a quite, well, dark outlook. Well, you dump stock, right? And this is exactly what we want to know. So if this is there's an increased likelihood that the institutionals will dump their stock and there's potential supply flooding the market. Well, obviously you want to be short the stock, especially if there's shallow pull-ins then after, let's say, a bearish opening drive or something like that. In this regard today, it's not of that high interest, even though now we look at AMD. Again, AMD was a runner yesterday, so really 11% higher, and started the day already gapping significantly up. You can see, by the way, now we don't have yet trading taking place here. So the first 5 minutes are cut out, in fact, at Admirals, because the liquidity providers want to see what happens in the stock itself. And this is something I will open my charts here now. There you can see Marvel, for example. And we go to a 1 minute chart. There you see the opening drive into 60. Let's see if we can hold this. Let's probably focus here on the price action first, and then head over to AMD. Let me just check, by the way. So AMD, where do we have it? There, 122. Let's see if we flush into 119. That could get me interested. But this is the strong opening drive higher. Very, 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 very strong. What we get to see here. Interesting now to see whether we're going to hold the pre-market highs. So right now, no need to take action right here. We want to wait for the first 5 minutes. Sometimes I probably even wait a little longer for a clear confirmation of my thesis and a clearer pattern to work out. In fact, what we want to see now after this pop higher here right into the open, what we want to see is that we can hold 59.30, or this is what I want to see in this regard. If we can hold this respectively here, the region around 60, that's a clear bullish sign in my personal opinion. And then I want to look out for long plays based on my game plan. So I know this already. If drives above 60, we got to see this right now, and holds, which needs some time, something like a short consolidation, short shallow pull-in, so opening drive with strong volume coming in, market holding a level, we're drifting a little lower, but there's not really selling happening or something like that. You see a consolidation at an elevated level with shallow pull-in in this regard. This is what I mean with shallow pull-in against VWAP, for example. I'm considering a long here out of this consolidation and then aiming for break above 61 and going for the momentum. By the way, you can also see here manage via EMA 9 in this case. So it's a very, very short time frame I'm trading here for the momentum if we get to see this. So that means, let me probably, can I I'm not really sure. Just here. So right now, I'm just giving you a picture I have in my mind what I want to see now. So you have the opening drive above 60. So now you can see we fail around 61, stuff into it, and now we are holding here. And so we are probably pulling in a little. But in this regard, very important, we can hold above, in my picture I have in my mind, we can hold above the pre-market highs, and we can hold above here in this regard the volume weighted average price. So the price which was on average paid from market participants so far. And if this corresponds after strong opening drive with now shallow pull-in, so market participants are selling against that level, but it's not that it's like the majority, but the volume is dropping. So there's not aggressive selling taking place. So now this is like a blow off or something like that. But market participants are taking profits to some extent, but it's not aggressive selling. Well, this is something I want to see here in this regard. And this then gets me interested to trade out of such a consolidation once we see a confirmation of a break higher. hopefully under increased volume. So that's then what I want to see. So you just look, for example, here at the candle now, you say, wow, look at this. This is now $1, 1 point within like seconds. That looks very aggressive. Well, no, it's not. If you look at the volume, you can see it's quite shallow. It's 350,000 shares so far, but compared to what happened earlier, it's not that interesting what we get to see here. And by the way, again, the first 5 minutes, it's quite good that we are not capable of trading there, at least for me. So it's not just that I got used to it, but in addition to that, also I found out that it avoids of jumping into the stock just because of I see something. It's like helping me to stay calm, wait now, and now you can see, so now we're coming in. So now we're trading around 60, as you can see here, but we are focusing on this chart. So we really want to see what do we get here from a volume perspective, especially. So as you can see now, there was some selling taking place. We dumped 1 point. Now we retested the volume weighted average price, so which was the price which was paid on average from market participants so far here for the day. And let's now see if we can hold 60. And by the way, we want to focus here because this looks interesting, more interesting than what we get to see right now in AMD. So we can look at AMD in a few seconds. I would get probably interested if we really flush to somewhere like 119. Probably I'm kind of bearish bias towards 125 on the upside, but this is more of interest right now. And by the way, you can see that. So here, look at the 1 minute candle and look at the volume. The buyers coming in against here against 60 around and the volume weighted average price. So you might probably wonder now, okay, why aren't we long? Because I'm right now not exactly seeing what I want to see. Because again, I mean, I adapt my game plan according to the price action. So it's not that I have a crystal ball and know what will exactly happen. But over time, you just develop some experience naturally, and you just see, okay, or you just find it out by documenting your trading, and you just find out, okay, sometimes I'm just too fast. I'm just too quick entering the action. So if I write something like consolidation here, what I want to see, a tight consolidation. Well, I really want to see a tight consolidation. So it's really like opening drive and then probably here. So looking at this. So what I want to see, let me just probably do this in white. So you have the opening drive higher, consolidation, and then the push higher. And if this now happens here against somewhere like the volume weighted average price, well, this is probably then a region against where I can clearly see like 60 or so, that there's buyers stepping in. Sometimes, well, this is too conservative. Sometimes it just happens that we are running higher straight away, which is a pity because I put in a lot of work. You can imagine that takes me something like, well, it's okay. It's 30 minutes of work each day because I know what I have to look for and so on and so forth. But if you put in all the work and you just realize that now your trade is running away while you are not, while you haven't entered it yet, well, this is kind of frustrating. But over time, you start to to calm down and say, well, there might be another chance. There might be another chance which might happen today. And there's other plays. So if I have two stocks like AMD and MRVL in this case, well, then probably AMD is playing out. So right now, let's probably head over to AMD and let's give you here an opinion or what I think of this. So yesterday again, we had a very strong run. So gapping already significantly higher. You remember that AMD was shortly after they released earnings some weeks ago. There was a news the next day that Microsoft is planning to, well, how can I say that? Help with their GPU business, with their semi business, let's say, producing chips for their ChatGPT OpenAI. There was a corporation, and that resulted in a sharp pop higher. So the guidance itself wasn't that strong on AMD, or well, it was okay. Was a solid earnings release, but it was well, we just came in quite strongly into the earnings itself, and so it resulted in a gap lower. So that was here 3 weeks ago around. So we come in quite solidly, saying over the year we were quite strong. If you go back to the early January, you have 60s around, and then from there we ran up like what was that, 60-70% or so, and then you're building this potential wedge here. And then you're saying, well, now earnings will be released, and I expect a gap higher here. I expect a gap out of this flag, and then, well, earnings or the guidance is not that strong. And the next day you have here, you can probably see that there's a sharp here. This candle, this is the Microsoft candle, out of the news that Microsoft plans to partner to some extent with AMD in this regard. And then we really took off for several days. And now we continue to push significantly higher. You can see here also we are going really nice, like parabolic. I'm here with this sharp push higher after the earnings were released from NVIDIA yesterday. Because, well, AMD is also well positioned in this space and potentially surprising on the upside for their revenue outlook for the upcoming quarters and with the next earnings release in around 3 months from now. So long thing short, very strong. Very, very, very strong. And we, by the way, we can see, I always have a look here at Marvel due to, so now we are coming in a little. So probably let's focus here again. It's again very strong. You can see buyers stepping in against 60. It's not, again, we are not yet long, but I start to wonder whether I wanna play it for a break higher above 61. I consider this to be really strong. So if I go long, I'm risking against 60, breaking higher here. Let's probably see if we're pushing again into 60 and hold once again. You can, by the way, again, you can see it's not that we are aggressively selling. It's like really like, okay, we're pushing into 60, coming in, pushing into 60. It's not that the buyers are really going berserk here and like, well, we just flush it higher or we drive it higher, but it's also kind of like telling that sellers are not that aggressively above the volume weighted average price and against 61 in this regard. So we're coming in again. Let's see. Well, the thing is, and this is again, patience, pace, and trading. So I'm still not buying. I'm still observing the price action because there's a chance that we are now dropping 60. So you want to be long against 60. And well, if we drop, well, buyers are not in control anymore. But instead, we are dropping. So now we're going again for 60 after a sharp push higher to 61. Let's see if we hold. AMD now below 121. I'm thinking about probably risking against the lows here, 59.80. So it's 50-cent risk. Let me just see. Just have to. So again, so you can see it here. Let me just probably bring it in that way. So we have the trading window here. It's okay. So this is around 60. So that's also something, well, not really sure what to make out of this. So like you see, okay, 60 holds, that's good. But you don't see a follow through right now. Right? So that smells fishy, to be honest. That's like, I'm not really sure. something just tells me, well, it's and this is also something, well, this is some discretion in your trading. I think you're allowed to have this as a discretionary trader. But we're getting tight. So we're really getting tight. So I think chances are good that, well, if we measure it, it's 240. So if we're breaking higher, the next leg up 240, 63 around. Probably I'm putting in a buy stop here above 60, 61, 61.40. Okay. So placing a buy stop here. So I want to trade the break higher. I want to trade the break above this consolidation, and it's also a momentum trade. So what I want to see is break higher and then really like seeing momentum coming in. So it's like breaking, go, and holding 61 in this regard. So if we don't hold 61, I'm not willing to keep the trade anymore. That's good. Oh, oh, it's okay. Okay. So let's just, I got slipped on 12 cents. Not so optimal, but it's the volume candle. I risk against the low of this candle. So it's like 60, 66, something like that. So risking against the low of the candle. So 60, 60, 66, 55, let's make 45. So it's the low of the candle. Oh no, I just realized, oh, they didn't take it up. Okay, let's take it out. That's bad. Why is it bad? Well, you saw it here. So 50 lots, but I forgot to click once so that it's activated. It was just 0.1 share, so it was a fraction of what I plan to trade. Okay, this is bad. This is bad. I'm sorry. I'm especially sorry for myself, to be honest, because if we are now taking off here, so now, well, it's a mistake. It's an obvious mistake. So and clear the mistake right away. So which means like taking out the trade once you realize you made a mistake. I misclicked. It's like 0.1 share. It's a wrong share. So just well, hypothetically speaking, just imagine we are long the share from 16 here, 16 slightly slipped on the upside. So now the question is on how to manage the trade. So obviously, well, it runs in our favor. Beautiful. Well, now it's time to, well, probably meditate a little. I have to make sure. So 1 point ahead. So now we can go step here, or well, we manage. We trail it via the EMA 9 on a minute time frame in this regard. 63 is the first target. So this is usually a level where I probably take out half of the position, probably. Getting a little extended here from 60 to 63. This move alone is $3. We know the ATR, as you remember, is 150. So it's 2 ATR move within like minutes, which is looking then a little extended. So the stop now is here, the last 1 minute candle on the EMA, which means like it's nearly break even now. So I'm having the trade nearly at break even. You can see what I really love to see here is the volume coming in once we break the highs, and we're holding again. We're holding 61. This is in my personal opinion, this is a very strong sign. And I still feel comfortable holding the position if I have the position. Well, whatever. So what shall I say? And here again, now breaking to new highs above 61, and there's not really aggressive selling coming in. This is very interesting because it shows that we are probably not yet that extended that market participants are willing to aggressively step in as sellers. So wouldn't be surprised to see another push higher, and really we are going for 63. just assume that we are still in the position. I take out here in this regard, and this is also something which is not possible if I have the wrong position size, so 0.1 in this regard. So taking out then something like 20, 25 shares here on the upside with a so-called smart line. So you can activate lines if you have the trade in, you can activate them. And I'm not sure what's in English, but it's Alt GRE, and there's this smart line window appearing then. And there you have the order number. Right now, there's no order in there, so no trade. But usually you can type it in here and then activate this order, and there you can say take profit, and then I take out. It's in German, so it's Handelsgröße. It's like the number of stocks you're planning to take out. So if I have 50 stocks as we planned to have, I'm taking out 25 here in this regard, and then I can save it, and you can see that this blue line then appears in gold. It's in yellow. And this is then exactly what takes out once you hit 63 on the upside. What here in this regard then takes out the number of shares we want to take off once we get a little extended on the upside. So now I have some work to do. So it's mental work now, because again, well, just imagine the trade plays out. We put in all the work, and then you just misclick, and because it's the wrong number of shares here, and it's something I didn't keep an eye on in this regard. So probably we're getting stopped here again. We are nearly at break even. So 16 was our entry. You saw it, and so coming in now, which is interesting because you don't want to see the EMA getting crossed below. So if we hold above the EMA 9 in this regard, the momentum is still in play on an M1 in this regard. And let's see whether we can hold. Obviously, it's the first attempt and buy a step in right back. If we make new highs now, we're going for 63 on the upside, and then the rest I continue to swing it, let's say. Okay, so only Marvel today. So I have also prepared something on AMD. Let's see, looks a little choppy right now. It's interesting to see if we get this pop up to 125. I think that's very important because the question is always how to measure extensions. So if I say, well, that looks very hot, or that looks like extended, it's the relative saying, right? So what is extended? And I love to use, and by the way, I just clicked now out of Marvel and talk about AMD because I can't see that, I can't witness it. So 62 now. So extended, I measured this with the Keltner channel. So what I have here in blue is the EMA 50. And now I have 5 ATRs based on ATR 22 in this regard. I have 5 ATRs on the upside here with this upper channel, and the lower channel is 5 ATRs lower. And as you can see here, we are very extended now after this move and gap up higher. And so we're coming into this zone of it's just run too much in the too short time frame or time period. It's just extended very much on the upside. Just seeing the 62. So that means looking here at the beginning here of this move lower in March, April 2022, this is a level I'd watch. And then probably if we extend there and we roll over, then probably we are about to see a corrective move, which I'd like to play for push back to yesterday's closing price, probably 120 or something. That would be another play I'm looking at. But again, yeah, Mara, what shall I say? I mean, okay, however, so I wish you happy trading. So Monday we don't have US equities trading due to the Memorial Day. So this is also something to keep in mind in terms of expecting too much in terms of volatility. By the way, I now trail my stop here below this low. So 161.30. So we entered slippage 16, I think. So 14 cents. Like we're safe for the trade now. And then now we want to see new intraday highs. And again, I take off half of the position against 63, and the rest I keep on trading it via momentum, via the EMA in this regard. And that's from my end. So all the best. Happy trading. Watch your stop. Have a nice weekend. Enjoy yourself. And by the way, if you have any questions, please feel free to shoot them over to Admirals. Let me just, by the way, here share this slide. Oh, here. If you have any questions, trading related, webinar related, please make sure to check out the possibility to send an email to the Admirals client support, so they will forward it to me and I will answer all your questions. If you watch the recording on YouTube, don't forget to subscribe, to comment, ask your questions. I'd be more than happy to answer them, and that's it from my end. So happy trading. Watch your stops. Talk to you next week again. I really look forward to it. All the best, and bye-bye.